Hello everybody, welcome to TraderMerlin Show. It is your Wednesday. Happy hump day, everybody. I'm hoping I got things fixed just so you can all see. I have over here the speed test reading right now, and as you can tell, remember yesterday we had a speed test of 79 download and 1 upload. Well, I'm over here at 889 download and 944 upload, so hopefully that works. If that doesn't work, then it's got to be something with the software and changes that were made to the system. So anyway, we should not have any issues today. If there are, let me know, whether it's audio or video. I'll do my best to dial these things in and hopefully not have any issues going forward. So happy Wednesday. Of course, no surprise. I think I was mocking Jerome Powell on the Fed on Monday's show, and we talked about Fed Day and what he was going to say. Pretty clear, right? I wish I could play it back. I just didn't have time. I'm pretty sure what I said was almost dead on to what the Fed was saying. What was the fix? So for some reason, the plug in this room just died. I don't know why. It just shut down not altogether. It gave me a really weak stream. No clue why, because it's been working for the past few weeks. And then I now have a 40-foot cable running all the way to another room of the house to get that internet. But hopefully, hopefully it won't be an issue going forward. All right, so what do we talk about today? Let us talk about, let's talk about the Fed. So obviously the statements that were made today were really nothing out of the ordinary. I like that he said we have to be nimble, which basically means they're backed up into a corner, which is why I love the picture I chose for today. It's kind of, Jerome Powell going, oh boy, we're in deep doo-doo here. I am at 1080. I think I'm actually at 720, David. I'm at 720 now, just so we don't, I could bog it down with 1080, but I might try 1080 just to give a clearer picture in the future. So obviously he's in a tough spot. And if you notice what happened here today, I think it was you, Big Eb, saying he got whiplash in the markets today. Yeah, let's look at an intraday basis, a 5-minute chart of, let's say, the S&P. I'll take off those external hours. And, you had pretty substantial swings. Oh, this is Peloton. Give me the ES. You had pretty substantial swings right after that announcement came out. I actually very lucky, as you guys know. I was long and short the market. So I was long at an NQ future based off a print that was shown from Rob. He sent in some screenshots that showed a much higher print on the NASDAQ. And I thought, this could be institution signaling. Let me go long. So as an announcement came out today, I just set a limit higher than the current market, like a good distance away, expecting there to be a whipsaw, which normally happens. And I decided to sell my long position and keep my short, which is I'm in QID right now. As you can see, beautiful. This spike up took me out on the NQ. I guess I can go to the NASDAQ. Here is the NQ. That spike up took me out, and then my NQ, or my QID, doing great because it was double short the NASDAQ. So all in all, a great day. I'm happy to have these down moves in the equity indexes, bring them on even more. The overall tone, I think, was one of pessimism and concern for the economy going forward in markets. But he did say, we've got a different market now. We're a little bit stronger. We've got a better job situation, which I think keeps us out of the stagflation discussion. But still, if they're going to be raising rates, we're going to see markets suffer. It's just the nature of the beast. It's a direct correlation there. You had today the yields start to creep up a little bit more. Let me bring up the daily. Here's your daily. You saw those yields come right back into the highs we saw just a couple days ago on the 10-year. Look, if the Fed is confirming, and you might remember earlier this year, I might have been in December, I was saying March. I think March is when we're going to get it. You're like, no, it's going to be later than that. Pretty sure it was going to happen earlier, sooner rather than later. And of course, I think it's all but confirmed that we're going to get a March increase in the Fed funds rate, which of course would put a little bit of a damper on the party that we have going right now. So as far as overall markets today, you saw that 10-year spike up. You can see the 30-year also showing a pretty nice move, although not as powerful as the 10-year in my opinion. You also had a little bit of flight to the VIX, which is not really a big move up, but a slight move up in the VIX, even though we still are sub 40 on the VIX, which means not that much fear. Big Ed says, Merlin, do you think this market has 4 hikes priced in at 25 each? I think they have 3. I think that they're pricing in 3 right now. And how do we assess that? I just kind of let's keep my ear to what the big guys are saying and kind of their tone. Remember, they're trying to bluff you as well. So when an institution says they think one thing, quite often they're thinking the other. So, I guess just experience and time in the market tells, when you see these things happen over and over and over again, it kind of develops a little bit of a pattern. So I personally think that there's 3 priced in. Primary reason is last year the Fed said 2. or potentially 2, and then all of a sudden it kind of creeped up to 3. So I think that what the market is looking at is the Fed's going to be aggressive just to get ahead of this thing right now. They'll do probably 2 or 3, and then if needed, they'll do a 4th one. But right now, I think you're going to look at 3. We'll have to reassess if on Friday. I mean, Friday's that PCE price index number, which to me is the piece that's driving the Fed's decision. If that number comes out considerably higher than what it is now, or the most recent reading, then I think the Fed's really going to be in a tight spot, and you might see his face turn into even more disturbed than that one right there. So let me run through on a daily here what we're looking at, because there really hasn't been too much change. Remember, gold came right up to that trend line beautifully yesterday, but drifting back down. So Tom, probably doing some spread trades. Gold might be a really good one to see if he can get some spread income going. Russell, no longer in the spread, but we are double dipping back into that demand zone that we have mapped out here that goes all the way back into December of last year. Now, given the strength of that one, I'm not sure it's going to hold. You know, it's not really the best demand zone in the world, and there still is a lot of negativity out there. So now that we have some clarity from Powell and the Fed, at least a little bit clearer picture, markets may have a little bit of a reprieve, but honestly, I think the intermediate to long-term picture is going to be down, simply because the writing is on the wall. It's not like, oh, well, we may increase rates. They're pretty sure. I mean, when asked, he says, we're going to increase rates soon. It wasn't, you know, if needed, it's soon, which really means their next meeting. So Russell, down today 1.57%, the worst of the indexes. Bitcoin, it actually started looking pretty good. It was some huge swings. If you guys think that the moves in the equity markets were volatile, check out the moves that happened in the 5-minute basis when those announcements came out. I mean, these were significant moves. Fell over $2,000 here on Bitcoin from that peak here, which peaked at 38, call it 38.9. It dipped all the way down to 36.3. So quite a big drop in Bitcoin in just a very, very short window of time. But all in all, really hasn't done much, right? It's just kind of sitting there. We still have this long bottoming tail, which has not hit that 32,000 or 30,000, which I still think it's going to go to. So we'll have to wait and see over the next couple days. But trend is down, still looking pretty ugly for crypto. Dump it. What language is that? My German might be a little bit rusty. What else we got? Oh, YM. So here's your Dow Jones Industrial Average. All these pictures look pretty much the same. You know, I don't really trade the Dow anymore. I haven't for years. But you notice the Dow also came in just a couple days ago into a demand zone, ripped out of that one, and you know, we'll see where it goes. Right now, I have no confidence in any direction in this market. I'm just going to go with whatever it gives us. S&P, similar picture. You know, you got that whipsaw over the past few days, although I still think this 4,100 mark is in play, in my opinion. NASDAQ, weaker than the other three I've looked at. So it's weaker than the S&P, the Russell, and the Dow, just simply because the way this candle is formed. It was a much greater green candle today, and then just gave back almost all those gains. And finally, you do have one bright subject, crude oil. All right, crude oil challenging those highs that the highest levels we've seen for quite some time. I can zoom way out here, and you can see it's really distracting with this long bottoming tail, but we are now into this kind of uncharted territory where gaps are going to be closed, and you know, this 93 mark or 90-93 mark looks really attractive going forward. So J. Powell double dip with a rate hike and lowering the balance sheet money. Yes. Well, remember, I talked about this a few times, guys. He's really in a tight spot. You can, but you really shouldn't start raising rates until you've ended your tapering, your purchases, right? And the main reason is kind of like doing an adjustment to your trading plan. Why wouldn't you want to change 3 or 4 things at once? Because you can't really see what the impact is. So let's say on my trading plan, I'm having inconsistent results, and I go, you know what? I'm going to cut back my share size, and I'm going to increase my stop losses to accommodate for the share sizes, and I'm going to switch over to biotech stocks or remove biotech stocks, whichever one. I've changed 3 things right there. And if you change 3 things, you can't point at one and say, okay, here's the impact. Here's the impact of each one. You're doing that impact collectively. So if they're doing tapering right now, which is let's reduce that balance sheet, stop buying mortgage-backed securities and treasuries, if they get that down to 0, they can see what the impact is there and not have that one still lingering over them. Then they can go and raise rates. But if you do both at the same time, I think that creates a big problem for the Fed and Jerome Powell and the markets, honestly. It brings in a little bit more uncertainty as to what those impacts are going to be. Remember, I mentioned that from my personal experience, you don't really see a rate increase or a rate cut impact the markets for 6 to 9 months. So if we do this in March, you got March, April, May, June, July, August, September, October, November. So somewhere between October and November, conveniently the 3 kind of negative months for the year, that's when that first rate hike could hit. Or not hit, but impact the markets, meaning it's going to hit our balance sheet, it's going to hit the bottom line, it's going to become part of the earnings, and you'll see the real impacts there. So it could be a while, right, before that all comes to fruition. So that's the exciting stuff for today. Where's it going tomorrow? Oh, heck if I know. I'm not making any forecasts on where it's going tomorrow. Personally, I just feel like there's some negativity out there, and I feel like this sentiment is kind of becoming bearish because the writing is on the wall. That said, you'll probably get some announcements from some banks and some financial firms trying to sway your opinion. Now, let's go to just some information that happened today so we can check this one out. These are earnings that happened today. You might notice some crazy numbers on here. AT&T beat earnings, Intel beat earnings, Tesla beat earnings, Lam Research beat earnings, Abbott Labs beat earnings, Progressive beat earnings, and then there's Boeing that said, hold my beer. We were supposed to lose 9 cents per share, and we lost $7.69 per share. That is a miss on earnings of 8,444%. That's a bad day for Boeing's analyst, right? Well, the good news is it was only down 5%, but the real one that I wanted to focus on was Tesla here. So let me just show you Tesla in the after hours. I tweeted out, I was going to try to do more tweets and be a little more social, even though I don't have any time at all. Here's Tesla. You can see that right now in the after hours, it is trading at 942. Well, it didn't have as volatile of a swing as I thought it would. Here's the aftermarket hours. So you had a pretty sharp move down. You had a pretty sharp move down from here. This is where they reported earnings. It dropped about 6.27%, but now it's actually positive. It's up 0.5%. So big volatile swings. Yeah, it was fun, Big Eb, but it wasn't as volatile as I wanted. I really wanted something. I was thinking 10% move in Apple or in Tesla at least. Now, the good news for everybody is we do have a popcorn trade of the day coming out tomorrow, which you really want to pay attention to. This is one of the most valuable companies in the world, which is, we're talking about Apple. So Apple's reporting earnings tomorrow. I'll revisit this later on when we get to the earnings calendar. But they've been beaten up pretty good, right? We're from about 183 all the way down to 155. Definitely giving back some over the last couple weeks, but percentage-wise, not the end of the world. So we'll see what happens with the earnings. I am not trading that one at all. That's a popcorn trade. I will just watch it. Chowsky says SQQQ. If you want to, that's aggressive, right? You're talking triple short the markets. That's pretty damn risky to do. But if you have a conviction that this market is going to continue to sell off with aggression, then go SQQQ. Just don't hold it a long time. You ask, what is the popcorn trade of the day? It's just something that I made up. It's I don't know, not a trademark or anything. Someone will probably steal it from me anyway. But a popcorn trade of the day, in my opinion, is it's an earnings announcement that happens usually after market hours, and it's so volatile that you just basically want to grab a bowl of popcorn, put your feet up on the desk, change your chart to a 1-minute time frame in the after-hour session, and just watch it pop because it's moving all over the place. It's like a little movie. It's exciting, and one of the things I love is when you're looking at it, you know that somebody's making a ton of money and other people are just getting slaughtered, right? I mean, absolutely get slaughtered. I mean, accounts can be blown on an Apple announcement or an earnings announcement for some of these major tech firms. So that's what a popcorn trade of the day. It's just something I made up because I'm a dork. All right, so we had the earnings out there. I do want to get to the economic data because we talked about a lot of this, but there actually was some really positive news, which was completely overshadowed by Powell's presentation today, right? And that's this. Look at new home sales. New home sales, they're expecting to increase from 725,000 to 759. There was actually 811,000 new home sales. That's a pretty significant beat. And to me, that just reflects optimism in the economy overall. So that's actually a great piece of data. Now remember, as the writing is on the wall, and it's very clear. I mean, this is straight Banksy graffiti on the wall saying, hey, we are raising rates. We will be, there's no question. Now what's happening is a lot of people are looking at it going, I better get a house now. I better lock in and buy something with these incredibly low rates. So I think that this is a reflection of the definity that the Fed is raising rates. Is now people are going out there saying, all right, I'm buying quick. Let me get that sub 3% mortgage, right? Because if they do raise, you might be looking at 4% or 5% mortgages in the near future. And of course, if you're buying a big price ticket item like a, I don't know, $1 million home, that adds up to a tremendous amount of interest. Even a 1% difference can make a huge difference with regards to your loan. So thought that was a pretty positive piece, at least to see the housing numbers spike up. So for those of you who want to sell into momentum, set a real high price for your house, and maybe unload it here and rent for a year and buy back in once these things crash to much lower prices. Because that housing bubble, we looked at IYR. All right, you look at some of these real estate things. Real estate's like IYR is already showing some pretty good weakness, but look where it's come from. I mean, IYR was down around $55. It's up over 100% since 2020. These equity market indexes are as well. So I wanted to show that main economic data, just throw some of the big stuff out there so we can get past that. Now, there was a couple great comments. And again, for those who might be new to this program, of course, hit the subscribe button. That helps me out. You can also email me at TraderMerlin@gmail.com. And I normally don't email directly back responses. I try to answer them on the show, but I'll do my best. Here's a question that came in from John. John says, saw a headline this morning. Why is my screen all off center like that? Hold on. Let me fix this bad boy. Let's put that, there we go, right in the center. Saw a headline this morning, newsfeed indicating Barclays says the S&P may fall another 20%, while Goldman says the bull market will continue. Can both be right? Absolutely. They're not can they? They both will be right, right? They're absolutely going to be right. Now, what Barclays didn't say is the S&P may fall another 20%. Okay. I guarantee you, though, over the course of my lifetime, S&P is going to fall 20% from here, from a level. Goldman says the bull market will continue. They are 100% correct because of the way markets are structured. If you look at again, I've mentioned this one many times. If you look at like the Dow Jones Industrial Average, you have 30 members, 30 components in that index. They remove the bad stuff. They put in stuff that they think is going to have more growth potential. Therefore, markets go up over time. So they both will be right. Do I think the markets, who do I side with in this one? If I look at your statement here, I'm more with Barclays. I think that the S&P can fall another 20% from here. That would be a bit of a stretch. You guys might remember my forecast for the year was we were going to drop 20%, then bounce up and end the year down around 15. Well, let's just do some evaluation on the price chart here. Now, some of these lines are getting a little messy, but I said we'd be down on the year. I mean, heck, I'm almost there. We've gone from peak to trough. We were down 12.3%. Dang, I didn't think I'd get down 20% in the month. 20% brings us down to, roughly there, which is going to be 3,800. So for those listening to the podcast, 3,800 is kind of that target for that one. Now, if we dropped another 20% from where we are at, that's a different story. That's a much bigger decline in price. I'm not sure if we'll get down this low. I mean, if we do get into a panic state and inflation does get real ugly, then this is a serious potential, but it's a stretch. You're talking 3,400 on the S&P. That's pretty deep. Basically, I love Fibonacci. If you look at the numbers there, that would be right around a 50%. Wow, that actually lines up. Confluence. If you look at the pullback here, where that level lines up, meaning 20% from current levels, it's just about pretty darn close to a 50% retracement of the entire move from those COVID lows in March of 2020. So not too shabby. 50 is technically not, for those who know Fibonacci, 50 is not a Fibonacci number. Just so you know, but people like to use it. Really, the 61.8 is a pretty important one. The 38.2, that's really important. The 786, those are the important fib numbers. But maybe we'll do a whole fib show one of these days. I've been meaning to do it, just haven't done it yet. Tom says, pull the rate hike Band-Aid already. Yep, I agree. Double dog there. Well, it's tough because there's a lot riding on it. If you start raising rates, it's a forecast for the entire economy that things are going to slow down. You're just resting the foot on the brake. But but eventually that pressure starts to slow down the vehicle. It doesn't stop it immediately, but it starts to slow it down. So yeah, I do think that there's still some potential good upside moves in the market, but by the time we get to mid of the year, I definitely think we're going to be heading lower. So I'm really pulling what I ideally want in a dream world. If I had my perfect world in a world, is I want this market to stop right where it's at right now. I want it to bounce back up to, let's say, 4,500 and roll over. And as soon as it hits 4,500, I will start building a much bigger position. I don't think I'd be in 420 puts again, but I'd definitely start buying a bunch of them. Because what I think you'll end up having is a head and shoulders pattern, which would basically means it comes up to this neckline here, or not the neckline, to form the right shoulder, and then it starts to move down. So I know I've got a lot of crazy lines. Let me get rid of some of this crap because it's kind of blocking our vision here. All right, perfect. So you guys can see we've got the left shoulder, which started back in July of 2021. Right, that moved up to a high, which was in September of 2021. Then it drifted back down and established this kind of little, still an impulse and a pullback, still in an uptrend. And then it did it again. But the difference that happened in this most recent sell-off is it came all the way back down to the neckline. This is the neckline, right? This red line here. So what ideally will happen is it'll bounce back up, meaning people are like, oh, there's still some buying opportunities. It'll rally up to, roughly 4,500. For me, that's where I will start buying some puts. And then we come back and test the lows. From that point, the traditional way that people measure this, head and shoulders, is they go from the top of the head to your neckline. And that, in theory, is how you should be forecasting where it's going to go. And if we do, that means we're looking at about 3,750 on the S&P. So that's really where I'm looking at. And again, that's all a huge amount of what if and this could, should, might happen. Really, it all means nothing at this point, right? It means nothing at this point. It's really about what's the market going to give me. If the market gives me the opportunity, then I got to take it and short this market. But if I'm wrong, I got to make sure I have stop losses in place because, anything can happen. Let's see. Well, that's my thought too. I'm waiting for that pullback. Yeah, we'll see. The more that this aggression sells out, this selling is so aggressive to the south side, the more it makes me feel like we're not going to get this bounce. And I'm frustrated because I wanted to get short like the third week of January. It was kind of my thought going into the year. Like, let's let January kind of settle a little bit. Near the end, I'll start shorting. But I was a little bit late. Luckily, I have a little bit of short positions. I closed out my Snapchat. I got rid of Snapchat today. Good, man. That was a great one. I'm still short Facebook. I got some QID. Those are them. OG says RTY to 1852. Let's check it out. What did we say? 1852? I don't see that being. That's really not that far away, man. I think I would actually move some of these lines. Go to 1852. I think you're probably spot on with that. Now you look where we're at. Right, so we're sitting right at this area of demand. You get 1852, that's really, that could happen by the end of the week. Look at where we're at. That is a decline of 7%. The way this thing's been moving, man, it was down 1.6% today. So actually, it's even a lower move. It would be a 5.9% drop to get to your 1852. I think you're going to get that. I absolutely think you're going to get there. Yep. All right, what else I got? Recovery in the fourth quarter? Yeah, we'll see. Again, all we can do right now is just hypothesize. And science is about developing a hypothesis and letting the numbers actually prove you right? If you formulate an opinion that these markets are going to be really bearish and all of a sudden we're not making new lows, we're starting to make new highs, you're seeing volume increase on nice big up moves, then you got to reformulate your hypothesis and say, well, okay, I'm going long. It's as simple as that. I would say hindsight is 2020, but since 2020 already passed, but I'm dumb. All right, so John, yes, I think both of them are right. I think that there is a very good potential for us to drop 20% more in the S&P this year. Now, these ones were sent in yesterday, so sorry if I'm late to them. Obviously, yesterday's show was absolutely awful. Good thing is I've seen no real video glitches, no dropped anything yet, so far we're pretty good. Here's the question. Lee says, would the GM news make for a good buy on GM, short on Tesla? Well, You guys, I don't know if you all saw the news, but GM is saying they're going to put about $7 billion into upgrading their facilities and plants to make them electric vehicle facilities. Basically saying, hey, Tesla, here we come. So if we look at GM, the chart isn't that great. It's not like atrociously bad. It's not like look at Amazon right now, right? You would think Amazon's this juggernaut, but boy, they're getting smoked. This has been a really ugly month for Amazon. You look at things like Facebook, it's getting crushed right now, right? However, General Motors, while it's sold off a lot over the past 2 weeks, it still hasn't broken those lows of $48. So, if you're thinking that this could be a potential boom for General Motors, I kind of tend to agree with you. I think that this could be very good for General Motors, but before we start thinking, hey, I got to go buy GM, let me ask you guys, since we got an active group here, how long do you think it would take to inject $7 billion worth of capital into a company to retrofit them, get all new technology, to get the assembly lines running, to find all the different parts and suppliers for these electric vehicles, to get them all together, and then get to the point that you're selling all those vehicles and now you can actually start to see money roll in? How long do you think that's going to be? Any guesses? While I do think in the long run it's going to be great for General Motors, in the long run, but I have to emphasize the long run. This isn't something like, they're going to do it in 2 months or 6 months or maybe even this year. Like, I just don't see that happening. There's just way too many changes. So, I personally would wait. I'd wait. I think what'll happen is there you go. Years, 3 to 5 years. Yeah. I think now you're a bit aggressive with 8 months, but again, I don't know. I know we have some people here who are in the automotive industry. Personally, I would tell myself, because I can't give financial advice on the show, that would be wrong. I would tell myself, look, if this market is going to sell off, if we are going to see some sharp moves down to the tune of 20%, then I can buy General Motors at maybe 36 or maybe 28 or 24, somewhere much lower. And if I really wanted, I might be able to go out to leaps. But again, I need a couple years' time for this really to impact. We said this many times on this program about Tesla kind of being a lead dog, but there is going to be competition entering the space. Toyota, General Motors, Ford, they're all making plays in the EV space given the success that Tesla has had. So I know they want to go all in, but it's going to be a lot of capital up front, and we'll see if people even like their vehicles. GM has not historically made the most amazing looking vehicles. With supply chain issues, July 2023. All right. Yeah, 2034 for Chris. I think the point's made, right? It's going to take a long time for that. Now, does that mean, you mentioned another one there, which would be short Tesla. I did not get a chance to look through any of the financial statements from Tesla today with regarding deliveries or what their strategies are, but they still are the king. There's no arguing there. So let's go TSLA. That trend is still up, looking beautiful. It's way too steep in my opinion, but again, markets can remain irrational longer than you can remain solvent. So I certainly wouldn't be wanting to short Tesla here, given what Elon Musk has been able to do and kind of how he does it. I would imagine that Tesla would continue to have its foothold for at least another year before these other competitors come online. I agree, Chris. Tesla is just like Apple fans, right? They're all cult. People waiting in line to buy their new iPhone before it comes out like the first day. Like, come on, man. It's a phone. Get it out. Buy it tomorrow and there's no line. Joe Frank says, any thoughts on Lucid upcoming earnings report on February? Any chance going long makes sense? Chart is ugly right now. So it's not just Lucid, right? You've got Rivian as well. Let's look at the LCID first. Man, I mean, that's a tough one. I'm glad you brought that up, Joe. Right now, if you look at Lucid's sitting kind of right at that 33.91 mark. And you can see that it has not dropped below this. I'll put a line right. Let's put a line right on that low that goes all the way back to November 2nd, which is right there. 33.11. Buying right now is a gamble. It's high risk. And if it does get below 30, let's say $33, I would probably say dump it and buy back at a lower price, just because I don't see any real demand here to support it. I like their vehicles. I like what they're doing, but the chart does not look great. You could take a chance on it. I would, if there was options were liquid enough, and I haven't looked at Lucid options, I would say maybe check out Lucid options and play that market a little bit, and maybe have a little less capital on the line for a greater rate of return. Now, what about Rivian? Oh, this is great. A friend of mine's father was like, I'm buying Rivian. I'm like, well, why don't you wait? If you know, does anybody here know what was the IPO price of Rivian? Right? What was it supposed to be? Right? The way that it works, so everybody knows, is with an IPO, they're trying to create as much demand as possible for, it's not only an IPO, but this also works for SPACs, which I think Rivian was. You have all of the underwriters or people behind that IPO or SPAC are promoting this thing like Kanye West promotes cryptocurrency or Kardashian promotes cryptocurrency, right? They don't know much about it. They're just trying to get as much attention into it because they're going to make a lot of money off it if it continues to soar. So what happens with something like Rivian is they pump it and they're like, hey, you got to buy this. Rivian's great. It's going to be it's going to kill Tesla, whatever they talk track. They will say anything because it's just their opinion. They're not going to hold them accountable. When something goes public, they'll say, here's what the price should be. Should be, let's say, $50, right? And if the demand is incredibly high, they've done a good job about getting Kramer to go talk about it on his Mad Money show, and CNBC and Fox and Bloomberg are all going, hey, man, check out this new stock coming to market. You got to go get some. We're really excited about it. They'll move it from 50 to 75. The company hasn't changed any. All they've done is created excess demand, and they flipped that price up. Rivian's IPO price was supposed to be $78, which I have on the blue line over here. So it opened up. It opened up at 106. So clearly they had increased demand. They jumped it up to 106 or 107 was the first official trade. Shot all the way up to 180. And I kept telling my friends down, I said, it's going to go down, right? They designated the $78 as its IPO price for a reason. And usually that's elevated, right? So I would say until it gets back to 78, I wasn't going to buy it. And now we're down at $60. This is pretty ugly. I would be okay setting an alert for Rivian that if it starts making a new high, I would probably look at buying into some Rivian, right? If you ignore SUVs, trucks, and a few other market segments, yeah, GM ain't got much. Tom, they're good. I think GM's good. Just down the road, not right now. Let's see. GDP, not so concerned with the GDP numbers at this point. We'll look at see if we can get some time to look at that at the end of the show. Anyway, just wanted to show this one. You've got, Rivian, Lucid. You've got our favorite NKLA, Nikola. $7. Remember when you were talking about that at 75, going short it, short that thing. Wah wah. At some point, Nikola might be a long-term buy. I'd have to look at the fundamentals. This is where I love having somebody like Larry on, because Larry will go through and he'll evaluate things from a fundamental perspective and see, do the numbers make sense? But, you look at a price of $7.66 for Nikola when it was trading at almost $100. You go, wow, this is a deal. Not necessarily, right? If they're not delivering products, if they're not really building on their vision and statements, I don't see much happening there. All right. Let's go to the next question. This one. Larry, I don't know if this is Larry Jacobson. I don't think it is. It says, can you look at Peloton? What's your take? All right, before we look at Peloton, I have to say a shout out to one of my old colleagues, Carter. I love him. He's just an awesome writer. He wrote a lot of the content for Online Trading Academy and just a great guy. He was talking when the Peloton was kind of in its heyday. He's like, I got to get a Peloton. I'm going to ride this thing all the time. I love Peloton. Oh, it's great. And my argument was, if you go to garage sales, and I'm sure some people here, you go to garage sales, right? You just drive through your neighborhood and you look up. It seems like 80% of the garage sales I go, they've got some kind of stationary bike, some exercise bike, some treadmill, some piece of crap that was sitting in their house doing nothing but collecting dust. Now, why did Peloton do so well? It did well because we were all stuck in our homes. Yeah, why not get me something that's interactive? It connected me to the world and also allowed me to ride the bike from inside my home. And I was like, this is probably going to do well until we open back up. And then what's going to happen is you're going to see Pelotons in people's garage sales in their driveways trying to get rid of these things. And I was like, short Peloton. Well, look at the Piton. Now, of course, they're citing bad management, bad leadership, whatever the case may be. Run from Peloton. Gyms are open. I agree, 100%. Run from Peloton. Don't touch Peloton. What is Peloton going to do that's going to all of a sudden cause people to run out and go, I've got to buy a bicycle at my house? That not only do I have to pay like $1,500 for the bicycle, but then I have to pay a monthly subscription. Not only is it not necessary because we can actually go outside and ride bicycles like normal human beings, but gyms are open. And you have tremendous competition. There's a lot of other bicycle companies doing the same thing cheaper. There's the Mirror that's offered by Lululemon. So what's my take on it? My take on it is this is just a dud. It's a dud. I know you're looking at it going, hey, it's at $25. It could fill this gap and go up to 88. Yeah, it could. It could. But I just don't. I think probability says no. I think probability is that the people who are going to buy Pelotons are not going to go out and buy a new one. You get iPhone users, they're crazy. Every release, they have to buy the new iPhone, and that's an expensive item. Pelotons are like, dude, I gotta get that new bike that just came out. Did you see the seat on that thing? Oh, it's got a bigger wheel up front, better sprockets. Nobody cares. You've got the Peloton. So I don't know. I really don't think Peloton is for me an investment that I'd be interested in at almost any price. Apple should buy them for their Meta World. Now that might be good, Alex. To incorporate this into their devices, and that might be a move. But at a certain point, it'll become a value play. But yeah, but not right now. Just looks bad. Looks bad. Wait, the $59.99 is not the monthly price of the Peloton bike. It's just a subscription. Yes, but you have to buy the bike and then you have to get a subscription. Too much. Yep, and right, didn't we talk about all those? He says same for Zoom, Dash, Netflix. Now Netflix, I get, right? Because Netflix, Netflix isn't an intrusive price. Yeah, $19 a month or $15 a month is not that bad. But you start getting the $60, $70, $80 a month, that starts to add up for something that you might not use that often. I mean, just go to Craigslist and buy a bicycle, or go to Walmart and buy a bicycle and ride it around your block. Better, actual pedaling. All right. Yeah, I haven't looked at Zoom. We were definitely bearish on Zoom. Let's see that one real quick. ZM. Oh, yeah. Looking great. And I think it's going to continue on down. Which is interesting because they had such a dominant market share. They were the kings. They were the only place to go for this type of stuff. And there you go. Anyway. So there you go. Not interested in Peloton, Larry. It just doesn't work for me at all. All right. Cool. And again, thanks for those that send in questions. If you have them, you can send them in at TraderMerlin@gmail.com. It's 38 after. I'll do a couple more questions here, which I have. I'd rather go to Planet Fitness, $30 everywhere in the U.S. Yeah, I agree. Right? You could go to the place, and if the equipment breaks, fine. You can take different classes. Go to Planet Fitness. I'm actually just about to renew my membership at 24 Hour Fitness down the street. That's going to be, I think, $39 a month. But I've got everything I could possibly want there. And it's 24 hours. How far down for Zoom? You tell me, bud. I mean, there's nothing here that looks attractive. I got to go out to a weekly to maybe establish some levels. I don't see anything where I'm going to say I'm a buyer of Zoom. Right? You're at 139. I mean, you have this real heavy basing that it did back in 2019. This is all pre-COVID. And that was right around $65. So is 75 a buy point for me? I don't know, man. I just can't do it. I can't. I can't do it. I just don't see the future. If I'm buying into something, I've got to really feel that there's a prolonged, pronounced future. Roku. There's another one I see people commenting on. Roku. It's dead. Not to sound like a skeptic, but who uses Roku? I mean, I know I have a couple friends who use it, but the vast majority are using Netflix, Hulu, right? Hulu really took off and kind of took that market share away, I think. But, Roku's gone from almost $500 down to $150. Whew. You're actually sitting right now in a demand zone for me on Roku. Not the strongest, but you are in an area of demand. And, this is the tough part because you look at something like Roku or you look at Zoom and you're like, hey, it's coming into area of demand. But then you're just about to have a point where the entire market is rolling over. So even if it's at demand, you're still going to have people unloading shares. Again, I think I mentioned margin calls, etc. So there you go. What else I got? Baidu for NJ. All right, now we've gone off topic, but this is fun. I would rather own Baidu than own Roku or Zoom or the other ones we looked at. Why? Because it's stopped. It's still slightly drifting down, but it's paused. It's kind of in this yellow box. We drew that yellow box a while back. This is a weekly. Goodness, we've been in this one for, I don't know how long I drew this box on here, but, there's another spread trade opportunity. Almost there. Wait for it. No premium show for me, guys. No. I don't even have enough subscribers to have to generate an income stream from it, so it's fine as it is now. We're good. Cool. Hey, thanks, NJ. I appreciate that. Here's one more from Jeff. Jeff says, tell me how you think Bitcoin is going to 100,000 when you think the market has put in a high for the year. These two have been somewhat correlated. Please discuss. Okay. Good question. You're right. They have been relatively tightly correlated. And if all of a sudden we get a huge move down in the equity market, in theory, that should pull capital from most places. Here's the thing. With the equity markets, it's a play on earnings. So for the most part, you're buying into someone's earning stream, that income stream that you'd be getting from it, and therefore you get the growth. If all of a sudden we see that the rising rate environment is going to choke out that earnings potential, money's going to come out of the equity markets, right? At that point, you have to put yourself in the position of, I'm a huge institutional banking customer. What am I going to do with that? I can't go and put my money in the bond market because it's too risky. You've got an overinflated bond market now. So I go, okay, well, bonds are out, equities are out. I might be able to do some serious options hedging and use options to generate income streams. Or I may go into something that's not really dependent on earnings. And you look at Bitcoin. Again, Bitcoin, one of the main things that drives me with Bitcoin is you have only 21 million that will ever be made, and again, 5 million in thought are already missing, lost. They will never be part of supply. So now you have 16 million of these things, and you have the entire world talking about using it as potential currency. So you have El Salvador, you've got Ukraine. I'm hearing now Argentina's talking about it. I'm hearing Brazil talking about potentially allowing Bitcoin to transact as a normal currency. And the more that happens, you get adoption. So if I'm looking to park money, while the world may be selling off equities and futures markets, you got to look at the adoption of a non-fiat currency. That's probably not going to be impacted by a global turmoil. It may actually benefit it because now you've got these crazy fiat currencies that are so volatile in rising rate environments. People going, inflation's all over. Let's go into a safe haven, if you will, in Bitcoin. It's not going to be necessarily impacted by the inflation and manipulation by central banks. And as that demand comes in, not just the demand by people, meaning you and I, but also from institutions and governments chasing a smaller amount of supply, price is going to go up. And I think that if you have the institutions who are coming with money out of the equity markets going, I need to park this somewhere, I think a good amount is going to go into the crypto space, specifically Bitcoin. I think you'll start to see other companies add it to their balance sheets as a store of value. Now, of course, we can look at MicroStrategy. MicroStrategy's been absolutely crazy lately, but here is MicroStrategy, at 353. They've already got tons on their balance sheets, and they've made it very clear they're going to be buying more and more and more and more Bitcoin. So to me, that's the main reason I see it happening, is a huge influx of capital pouring into looking for a place to park itself. So there you go. That's why I think you'll see it at 100,000. And it's going to happen, pretty quick. Again, all it's going to take is a couple more countries to say, hey, we are accepting Bitcoin as payments. And other companies as well. You look at something like some of these fast food restaurants. There's something funny going around. I think that Elon Musk said something like, if McDonald's accepts Dogecoin for payment, that he will eat a Big Mac live on camera or something like that, which is really funny. But if I'm McDonald's, yeah, if McDonald's doesn't do it, that'd be stupid on their part. All they have to do is set up a payment system that as soon as someone pays with any crypto, it converts it into a fiat currency, US dollars. So there's no arbitrage or currency risk to McDonald's. But now you've got Elon Musk, one of the most prolific social media influencers in the history of financial markets, going to be eating a Big Mac on TV, and you can use that as marketing. Oh, yeah. He will eat a Happy Meal. Is that what it was? Hey, either way, he's eating a McDonald's product, and you can use that as marketing. If I was marketing, I would just take that video and just show Elon Musk on. I don't need to say a word, and just put McDonald's accepts Doge. That's it. That's my ad. Done. Anyway, I thought that was very interesting. But again, I think you'll see more adoption and more people accepting cryptocurrency and Bitcoin, et cetera, and stuff like that. What do I think? The YM closure? You mean the way that the market's closed today? Same thing as we looked at it 2 days ago. 2 days ago was very bullish. This actually looks fairly bearish. Why? Well, because you had such a long topping tail. All right. Yeah, I'm guessing that's some spam. I'm just going to remove that one. I won't report that one, but I'll remove that one. I think that you've got a kind of a negative candle on there, but I would just be careful tomorrow. You've got some major announcements that are happening that you need to be really careful with, and I think that you could find yourself in a world of hurt if you're on the wrong side of it. So, for example, here is what we have for tomorrow. You look at the numbers. Yeah, advanced GDP, right? They said it was 2.3% was the previous number. They're expecting it to jump to 5.3. That's a pretty big jump. I'm not putting any expectations on beating that 5.3%. I think that if we got there, that would be pretty impressive, an increase. But, that obviously would be a positive catalyst for the market. But to me, that pales in comparison to the number that's coming out on Friday. Right? The GDP sounds great. How quick is the economy growing? Right now, there's a move away from that. And I mean it like this. When you have all this economic data, CPI, PPI, GDPs, all of it, import prices, credit card usage, realized sales, housing, all of that data is, how do I say this in the right way? It's like seasons. Right? So inflation, that could be spring, and GDP, that could be fall. And right now, we are in the inflation season. Nobody really cares about, it's not that we don't care, but the importance of GDP has been put on the back burner. All eyes are on inflation, period. So to me, that's where you start to put more relevance or significance on different announcements. Right now, I think the most important one you got to watch out for is that Friday announcement, that PCE price index. Why? Because Jerome Powell has said specifically, we don't really look at CPI and PPI because it doesn't include this, that, and the other thing, blah, blah, blah. We look at core PCE price index as our determinant for inflation numbers. And those numbers, which I'll show you tomorrow, are being released on Friday. Now, the Fed kind of painted a pretty stressful situation for themselves, right? They're in a spot where they need to really be careful. They need to be quick. They need to unwind their balance sheets and then quickly get rates up to help slow things down. But if we get a serious spike in inflation on Friday's reading of PCE core price index, then all of a sudden four rate increases could be on the table real quick. If all of a sudden it comes out incredibly low and all of a sudden it's subsided, which I don't think it will, then all of a sudden we have to question, are we going to get 3, right? So while I have an idea of what might happen this year, it really depends on the data and what information is given out. And of course, that data is probably manipulated, so we have to take that with a grain of salt. But anyway, that's my 2 cents on it. You have a lot on 401k on age retirement 2060. I hate those funds. I don't like those retirement funds. They charge you a good amount of fees, and they'll constantly be changing the portfolios to more bonds the closer it gets to 2060. NJ, you're an OTA student. Take Strategic Investor. You can make way better decisions than just keeping it locked up in a retirement 2060 fund. All right. I think that's going to do it for me, everybody. I'm glad we got the situation fixed. I actually have a good friend of mine coming by to fix this plug so I can use the wire. Wire doesn't have to run all the way through my house. But that's it for now. Friday, I got to reach out. I think we're going to have Don Fran on the show on Friday. Tomorrow will be just kind of open Q&A. I've got multiple questions I need to get to from a couple of you, which I have not answered yet. That's okay. I got to stretch some things out. Don't want to be on Happy Meals? Hey, if you're going to... Yeah, I'll be on a Happy Meal. If someone want to put me on a Happy Meal, great, but it's got to be in my interest. It's got to be some money being made for me. I'm sure Elon Musk would laugh all the way to McDonald's with that Happy Meal in his hand. Cool. All right, everybody. Well, thank you so much. I'm glad we had a full-length show today. That nothing went haywire on us. So pretty excited about that. Hopefully I'll have this office or this room here, my man cave, all up to snuff, and I can show you guys what this place looks like. It's going to take some more time. There's a lot of things that need to be changing here, but the office is good. If you have questions, comments, feedback, send them in at TraderMerlin@gmail.com. Then I'll get all those questions prepped and ready for tomorrow. So I will see everybody on Thursday. Take care.